Money isn't magic, it's an agreement. We use dollars because everyone else accepts them, and because stores can turn those dollars into sugar, wrappers, rent, and wages. Candy is the product. Dollars are the tickets that move candy from factory to shelf. That's why the store wants dollars instead of your old toy. Dollars can settle any tab in the system. Earning dollars is simply trading usefulness for tickets. You wash a car, design a flyer, edit a video, teach a lesson. Someone trades you dollars because what you did saved time, created value, or solved a problem. The moment dollars land in your hand, three paths open: spend, and the story ends today. Dollars out, candy in, happiness now. Hold, and you press pause. Dollars wait for their turn. Grow, and you point dollars at something that can produce more dollars later. An enterprise, a skill, a slice of a business, or something else that makes you more money over time. We usually call such things an investment. Banks exist because mattresses are terrible vaults. A bank keeps dollars safer and keeps score for you. When dollars sit there, the bank may pay a little extra called interest. Small, but better than nothing, because the bank lends most of those dollars to others while keeping enough on hand for people who show up at the counter. If you borrow, the picture flips. You take dollars today and promise to return them plus extra tomorrow. Used well, borrowing pulls a good future forward, like buying a candy mixer that lets you make more treats each hour. Used badly, it drags a bad future forward, where tomorrow's dollars are eaten by yesterday's choices. Why do prices move? Imagine too many dollars chasing the same candy shelf. The owner raises prices because the line is long and the jars are finite. That's inflation. Your $10 buys fewer sweets than it used to. The opposite happens when shelves are full and buyers are scarce. Prices soften and your dollars stretch farther. In real life, this push and pull never stops, and understanding it isn't trivia. It shows up in rent, mortgages, wages, and everyday bills. Behind the scenes, a country's central bank regularly adjusts a powerful knob: the policy interest rate. Turn it down and borrowing gets cheaper, people and firms buy more, and the economy speeds up. Turn it up and loans cost more, purchases slow, and price pressures cool. Those decisions can feel distant, but they help decide whether a family can still afford a mortgage and how quickly prices drift over time. Money and monetary policy aren't abstract, they set the temperature of daily life. Cash and digital money sit side by side in this story. Cash is universal and works without electricity. Digital balances move faster and make large payments safer and traceable. Each has trade-offs. Cash protects privacy and access. Digital money helps the system run smoothly and makes it easier for rate changes to ripple into the places that matter: loans, deposits, and market prices. Even that quiet tug of war, how much cash should circulate, how should digital payments be designed, shapes how well the policy knob reaches your grocery bill or rent. Notice how the candy shop connects to the whole chain. When you buy a chocolate bar, the shopkeeper orders a replacement from the distributor, who pays the factory, which pays for sugar, packaging, delivery, and salaries. Those salaries become someone else's purchase tomorrow. When people feel confident, dollars flow quickly from hand to hand. When they worry, dollars linger, shelves feel fuller, and businesses hesitate to reorder. Money is not only coins and notes, it's a choreography of expectations, habits, and rules. The rules, especially the central banks, set the rhythm. Too fast for too long and prices overheat, too slow and jobs and growth suffer. Price stability isn't a slogan. It's the condition that lets families and shops plan without constantly guessing what candy will cost next month. Zoom in on the everyday instruments. A deposit in your bank app is a claim on your bank. A banknote is a claim on the central bank. The central bank doesn't set the price of every candy bar, but by steering short-term rates and expectations, it nudges the thousands of choices that do. Whether a factory expands, whether a landlord refinances, whether a shop runs a promotion. That's the transmission people talk about. Move the knob, then watch the ripples of loans, spending, hiring, and prices work their way across the lake. If this still feels abstract, return to the $10 at the counter. You choose how much joy to buy today and how much certainty to keep for surprises. You also choose how many dollars to aim at engines that keep up with the system's drift. Enterprises that can raise their own prices or expand profits as the economy grows. That isn't a nudge to buy anything specific. It's the map of the terrain. Money loses bite if it naps, keeps bite if it owns something productive, and follows the climate set by policymakers, trying to keep the room comfortably warm rather than scorching or freezing. The last piece is time. Nothing in the money world is instant. Compounding, whether it's interest in a bank account, skills that raise your future pay, or the profits of a business you partially own, needs years. Policy changes also need time to work. A rate move today often shows up months later on shelves and in paychecks. Understanding this lag is liberating. You worry less about today's headline and focus more on steady choices you can actually control. So Money 101, in one sweep, looks like this in practice. Dollars are tickets everyone accepts because the system says so. Work trades usefulness for tickets. Banks safeguard tickets. And lending connects today's needs to tomorrow's pay. Prices rise or fall depending on how many tickets are chasing how many shelves of candy. A central bank sets the background beat with its interest rate knob so the song doesn't rush or drag. You feel that beat in rents, mortgages, and the checkout total. Cash and digital balances are two instruments in the same orchestra. Different sounds, same melody. Live inside that melody with a simple rhythm. Enjoy some candy now. Keep some tickets ready for surprises, and let some tickets ride on real work that creates more value over time. No tricks, no secret club, just rules, habits, and a thermostat behind those oak doors, shaping the room we all share. We hope you understand money now. Hit the like and subscribe button for more sweet videos about money.